First thing we're going to look at, and one of the biggest reasons why people aren't successful in trading and why you're losing money, is something that you probably have, or something that's probably happened to you, and something that you probably hear a lot, which is my position came up, it stopped me out. It only stopped me out by a few cents, and then it reversed and it went completely the opposite way, right? Like, how many times have you been in a trade where you get stopped out and the next candle and then the next four candles end up going in your favor, right? And you would have made at least a solid trade, and you would have hit your profit target, but you got stopped out by only a few cents. Well, the reason for this is because a lot of people are trading, right? A lot of people on these big stocks, for example, we're looking at Tesla on this one, they have their stop in the same exact area, right? There's a lot of people looking at the same thing. And also, there are some money makers out there, banks and other hedge funds that have a lot of money in the markets, and they can kind of control these price areas. So one of the price areas we're going to look at here is 205.50, which is right on this dotted line here. And you'll see 205.50. Let's say you had your stop at 205.50, right? You get in for the rejection of 205.50, and you have your stop, right above these candles. Because if it goes above 205.50, it might be a bullish pattern, and you don't want to be in that. You don't want to lose more money than you have to. But you'll see it just barely breaks above it, and then so you and a lot of people would have got stopped out, and then boom, the next three candles just rip all the way down. And this is something common, and you can go back and look at the charts that you trade, look at the stocks you trade, pick out your important levels, or at least pick out the levels that you think are important that you're trading, and I guarantee you'll see that just by the tip of it, you'll see that things are just barely breaking above it, and this is what's causing you to stop out. And so we'll look at this 205 level. Once again, hits right at this 205 level, and then boom, just barely breaks above it. Next three candles were red. And then, there was even a larger continuation that you would have missed out on if you're doing more swing trading instead of scalping. But the idea behind this is just move your stops a little bit up, or wait for a little bit better position entries, right? Like maybe anticipating the trade. So a lot of times I'll get in early to trade, so that way I have a little bit more of a cushion. Yes, you do take on a little bit more risk, but you're also mitigating that risk with the reward of, a lot of times I've pretty much stopped saying now, oh, I got stopped out and then it reversed in my favor. And it's not that I'm holding positions and I'm taking larger losses. I'm just getting into positions a little earlier, and I'm recognizing where I think important stop losses are. So, for example, for this one, if you see all these previous topping candles come out to 205.1, I'll put my stop at 205.12 maybe, and you'll see here, you would have been safe. Back here, you can see at the bottom of these green candles, it actually looks like it's at 205.75. So if you're playing this 205 level, you should really be closer to this 275 level for your stop, and that's just to capture this gain, right? Because it is going to pop up and take you out. And like I said, you can pick out, I have another one drawn out here. You'll see this is the 200 level. That's a big level. A lot of people are trading this 200 level. You see it had some support back here, some candles have been close to it, but you'll see they just barely break above it and then crash back down. Barely break above it. Like, imagine if you were in right here, your stop is at 200 or 200.5, and you're like, yeah, I just don't want to go above this because it might rip up and go to 201 really fast, right? So you have your stop there, and then you're watching, sitting there, getting mad that this is happening, right? So that you really just want to mitigate this issue, and that can just be solved by moving your stops up a little bit more and realizing that there are people who are getting stopped out with you, and this causes a 10 to 15 cent move on some of these candles. So implementing this into your trading, and like I said, go back and look at your trades, really study your trades and see if this is something you're having an issue with, because I almost guarantee that it will be. And the second thing we're going to be talking about is overtrading. I see a lot of people who don't have the largest accounts, they don't have much success, and they're sitting there trading 10, 20, 30 times a day, and that's just a recipe for disaster. If you're overtrading, you start to get emotional, you start to break your rules, you start to just get in that mindset of just one more trade, right? And so like a good example of this would be, let's say you're watching this trade and your strategy, you think, hey, it opened red, I don't think there's a lot of support, I think it's going to continue red. So on the open, you're in here, and then you're great. So you take out your profit here, and you just made a great trade. You're up on the day, you want to get more. You see there's a little bit of a recovery here, so boom, you're in again, right? You just made money shorting a stock, so you want to go short again. Well, your short ends up getting stopped out up here, and now you're a little bit break even on the day. Well, Since this just reversed up, now you're looking to go long. So then they see this, you're breaking yesterday's close, so people are in here, and then it goes and they get a big move and they're great, awesome. Now you're up again, your third trade of the day. Well, there's a little bit of consolidation, a little bit of a drawback. You think, okay, awesome, this is where it's going to break up. So you're in right here. And then, well, wouldn't you see what happens? It crashes back down. Okay, you stop out here. You're still break even on the day. All right, there's a little bit of consolidation here. You think it's getting ready to rip back up. So you get in here, awesome. You're out here. You see more consolidation, and it's near. You're coming up on some resistance because of yesterday's close. So boom, you're in short here. It ends up ripping up. You get stopped out here. You're now looking at 5-6 trades into the day, and these are just 1 minute candles, so these are fast trades. And I see people do this a lot where you're trading multiple strategies, right? You're trading a wedge here, you're trading shorting on the open, and then you're trading break of yesterday's close, and then you're doing continuation method, and you're just over trading, and this is a fault that I see a lot of people do. And when I first started trading, I was definitely doing it. I was looking for every trading setup possible, and this is what we're going to talk about in tip number 3 in this next part of the video, is just really minimizing your trades to just getting quality setups. If you take 2 trades a day but they're both winning trades, that's a lot better than taking 8 trades and 6 of them being losers. So just for peace of mind, and honestly to just get a better understanding of trading, it's just minimize trading. I think that's the best thing people can do. Before, if you have a $10 stop loss per trade, if you're trading where your stop loss is nominal, if you have a $10 stop loss but you take 8 bad trades and you're down $80 on a day, that's really hard to recover from. But if you tell yourself, hey, I'm only going to trade twice, and you're down $20, you can lose both trades for the next 4 days and be down $80 instead of being down $80 and then $60 and then $50. And also the odds of you getting a winning trade when you're trading less is higher. I know that sounds backwards, but if you only have 2 trades, you're a little bit more cautious. You're a little bit more aware of what's going on in the market. So that's the second tip there. Just limit trading. Really study and look back at your trading logs, right? I think that's another important thing people need to do, is just look back at your own trades. Third and last thing we're going to talk about today, which is definitely not the end of most people's problems, but that's all we're going to put into this video, is the fact that a lot of people don't follow rules. A lot of people don't have set trading rules that they follow. A lot of times they're just looking for every trading setup, like I was saying earlier, right? You're trading multiple different things. You've got Fibonacci curves, you've got all these indicators, you've got everything on your screen. It's lit up with all these different indicators, and you're just looking for every trade possible. The best thing to do would be to get kind of like a playbook where you have 2 or 3 really good setups that you enjoy and that you trade every day. So like me personally, most days I only trade SPY. I'm not looking all over the market for all different kinds of trades. So stocks really do start to move like an animal, and they're like a living organism. You can really understand what they're doing if you study them for a long time. If you're sitting here watching SPY every single day, or let's say you like Tesla or Google or Amazon or Meta, whatever it ends up being, and you're sitting there watching it every day, I promise you will get a better feel for it. And if you make some trading rules that you follow where, like for example, one of my trading rules is I follow what the trend is on the day. So if SPY opens up red, I'm only looking to go short. I'm not going to go against the trend. And for me, that's what's worked. It might not work for you, but that's what has worked for me. And so an example of this would be, it's red on the day, like this is today, it's live. And if you want to watch some of my other videos, I do live trade. I do voice over them, but the trades are live. And so you'll look here, I was watching the 380 level today. And so, 380 level here, we came back up and tested it. So this was my first entry. I got in here. I had my stop above 380. If you're listening to before, it was about 325. It was looking at this previous consolidation back here. And so, as you can see, it followed itself down and we took out some profit along the way. And that was great. The next time it came up on 380 was this area. I had a tight stop loss, and you have to think, we're letting these contracts run. We're letting our positions run. So you're collecting profits all the way down to here. Meanwhile, the stop loss on this one was here. So you can see, as long as you follow these trading rules, you don't have to be right 100% of the time. Your winners just have to be bigger than your losers. And when you're following a strategy you enjoy and you like and that's working for you, it tends to happen. Because you'll see we came back here and we were at this level again, and we went short, and we're taking out our last contracts down here, and that was our second trade of the day, and I was done for the day. I only wanted to trade twice. I only had the time to trade twice, but looking back on it, even here, if you wanted to get in at the 380 level and you wanted to move your stop back up in the 325 area, you still would have been safe, and you would have caught this move as well and continued down the rest of the day. And like, there's just not a lot of opportunity for you to look for long trades. Why would you be going long on a day? And that's just a rule I follow. Everyone has their own trading rules, but that's a rule I follow that works for me. And ever since I started following a set 2 to 3 rules, my losing trades have gone away a lot. I'm now hitting like 70 to 80% of my trades. And a lot of times when I do miss a trade, it's because I didn't follow my rules, right? Obviously, yes, you're going to have trades like this where it doesn't work out. But a lot of times I do break my own trading rules, right? It'll be Friday, which I don't like to trade on Fridays. And I'll say, I'm going to trade on Friday. I think this is going to happen. And it's kind of more of a long shot trade. And, if you just work towards minimizing those, a lot of times you end up better. So that's the third and biggest tip right now that I have, is to just make trading rules. Watch back all your videos. I personally record all my videos so I can just watch them like I would footage of like a football team would. And that's really how I improved my trading, was watching back my own videos. But hopefully you guys enjoyed this video. Like I said, there's a lot more we can go over to beginning your trading and really how to turn around your account. So please like and subscribe. Thank you.